Now the focus will be technicals in this video, but I do want to talk about some of the big issues and the big concerns as we look at the market. Now, again, we've talked a lot about fundamentals over the past few days, kind of weeks. Now, I do want to just take a step back and just talk about trade setups that are right in front of us to let people kind of get a better sense and really what you're asking for as the viewer. But I do want to say, the fundamental bears thesis is still playing out. So what do I want to say before you even dive very far into this video? That fundamentally we remain extremely bearish. We have a lot of things on the fundamental sides that are very bad. But from a technical standpoint, we continue to make higher highs and higher lows on the indexes as far as the ES and the Nasdaq. Now, when we chart those, we'll get a better viewpoint of what I'm talking about. But that being said, we haven't had the technical signal for an entry yet. And that's what's been the driving factor behind most of our success here on the channel over the past 2 months, give or take, has been waiting for those entries. Now, you get to trade what's in front of you, but we need to talk about what's really happening. The first thing we're going to be looking at here, and really the only fundamental thing, is going to be credit default swaps. And we're going to be explaining exactly what's happening here. But before we get into that, I have to ask you to do two things. Consider liking and subscribing. I go over the viewpoints, the fundamentals, the technical, right, wrong. I tell you exactly what happened. I go over the plays and everything in between so you can see. And then on Saturdays, I also make educational videos. Tomorrow's video will be on market structure, just to let you know as well. So consider liking and subscribing. Sunday, it is the newsletter day. This was last week's newsletter. It gave you everything you needed to know. ES, NQ, the Dow. It gave you what's happening on VIX based on requests. You can also email some request things to put on the newsletter. Tesla, Nvidia. It told you everything on those charts of what to look for, what to expect. You can go back and back test those key levels, and you'll kind of be shocked by the reaction of those levels and how many trades are really kind of set up there. You get the economic report, the calendar of what's going to be happening on earnings, and then anything else that we may have going on posted on there. As well, we have a few spots opening on Discord. There's no spots available right now. On Sunday, if you're in the newsletter, you'll scroll down to the bottom and it'll say somewhere down here where you can try to sign up if there's available spots. We'll open up only a select few, so make sure you check that out. But let's get back to this. Now, I'll have this on Twitter, so you can just look at my Twitter. The link again will be somewhere down below. But when we look at what's happening on the credit default swaps, we saw the same thing happen with Credit Suisse. We're seeing the same thing happening with some American banks as well. One of being Capital One. That's the one we were trading yesterday. And when we look at what's happening here, it's shocking, right? So you can go back and see mid 2022 right here. We had a nice spike. Then we came down to the beginning of 2023. And now we're higher than we've been. This is going all the way back to right before, like right pre-COVID, right? So you're seeing the same thing happen over and over and over. And now the worry is the contagion effects, right? What happened with Credit Suisse? Is it going to affect UBS? Is it going to affect Deutsche Bank? Is it going to affect HSBC, I believe is the name, HCBCBS? It's one of those. Those are the European banks. And then it's is it going to come back and affect the American banks? And it's this giant cycle we've been talking about. So getting and looking at these credit default swaps basically shows you how much money is being bet against this. And now I was reading an article this morning of the possibility of banks and funds playing credit default swaps against Deutsche Bank to mitigate risk that they may have in the market, because if they collapse, it would give them some sort of collateral. And it's really this just dangerous game that's being played. Again, that's the fundamental viewpoint. So even though when we come to the charts and we look at something like NQ, and we can see here on a higher time frame like the daily, that you just keep pushing up, right? We're just sitting at highs. We're making higher highs. We're making higher lows. You look good, right? So when we look at this, we can look at, okay, the market keeps going, but the fundamentals on the back end, which may be a little bit lagging, or, leading indicators, might be telling us something different. So I'm just proceeding with caution. And the number one thing I can say right now is when you're looking at this market, what you need to be doing is viewing it from a viewpoint of mitigating risk. It's like we were talking about last month and a few weeks ago, right? Go into each trading day pretty liquid. That's been my mantra over the past month, give or take, right? That's been the flow of what I've been trying to do. Now, that being said, you still have some decent opportunities in front of you, giving you a viewpoint of some of the stuff I was doing today, right? So I was live every day at 10:30 a.m. Central. We're live here on the channel, and I posted a few trades. These were live for you, right? And this first one was, at least. So I posted this at around, you can see 11:47. We were live. You can see we got in an Apple right above VWAP. We were aiming to the highs a day around 159.5. right when I got off stream, it actually ended up running right up to that target. So you're getting these small moves that are still there. Microsoft had that move. We ended up busting through the highs in the day as well, went up about 20%. So you still get these small scalps that are there nonetheless. But you got to be selective, and you can't be too aggressive with holding some of these upside moves because you just don't know what's going to happen with news. Also, we had Bullard speaking this morning, and the Fed's kind of also the same thing. We're not gonna pause rates just yet. There's no statement on pausing rates. We're definitely not cutting rates this year, and that's kind of where they're at. And they've said that there's also a back way of attacking inflation with tighter credit requirements on smaller banks and the middle class, lower class America, tighter credit, which I think would definitely, would work on inflation, but I think there would be instant pain in the market within the next few weeks and months. And then you would see defaults on banks start to rise as well as defaulting credit loans, right? So that's where that would happen. Now, that's where we're at right now. That's what we're looking at here. At the end of the day, you're pushing back up to highs. You look okay. It's not a bad day. Nothing terrible. Market's going to close in a few minutes, and we're just sitting basically at those highs. That's where we're at today. There's nothing crazy, nothing bad happening, but ultimately, that's where we're at. Okay. It was a pretty mediocre day to say the least, but no complaints, really going on there. And, that's where we're at. Okay. Now, when we look a little bit deeper, let's talk about where we're at and ultimately, targets that are here. Now, on the 4-hour charts, really what you have to use, you're getting rejected and you're making a little bit of a pin in here, right? So I will say you are getting rejected, but nonetheless, you continue to make these higher lows here, right? Continually making the higher lows. It's not perfect, but you can still see higher low, higher low, higher low, higher low, and you're making lower high, lower high, lower high. And these are smaller time frames, right? On the daily, you're obviously pushing higher highs. And we broke local highs that we had right here. Okay. And now you flip this little demand and you're kind of finding support at it. So from that viewpoint, or that supply level, from a technical viewpoint, continuation is kind of what's setting up here. That's just where we're at. You look good. Continuation from a technical viewpoint is there. But you have to be able to take a step back and identify when the fundamentals and technicals aren't lining up, and then as well as looking at what's happening with the underlying indexes as far as ES in comparison. ES did have a pretty good day in my opinion. Really great bounce off the 200 SMA that we had down here as well. You can go in right here, turn the 200 SMA on. You bounced once again. We're pushing back up really strong off that level, right? So you're getting good reactions, okay? But then nonetheless, that doesn't deter us from realizing what's really happening here. You can really see that this channel we're trading into the downside, right? You can call it a bull flag, whatever you want. You're getting a little bit of a breakout now. So going into the next week, I have to look at the market. I'm like, man, there is actually the possibility of some continuation here, especially as we go into next week with PCE data. I believe it's on Thursday or Friday. That's going to be very influential. PCE comes out good. You have a path of continued upside to really questioning, is a bottom really in it? Because if PCE comes in good, as bearish as I want to be, as I look at the technical viewpoint here, I have to say, and I'm going to keep saying it, on the daily time frame, if you make a new local high over 13.7, you have broken the downtrend completely. Not only that, you've mounted the 200. Not only that, you are making a new local high. You will make a higher high here, which is good on the longer term weekly time frame. And that gives you strength, in my opinion, kind of flips the script entirely. Okay, my personal opinion. And from that point, the only thing that could possibly drag you down is major bank failure across the board. And if we break that level, it'd be unlikely that we would have that, in my opinion. That's where I would stay. That's where I'd be. Because if we break that level, it means that most likely we have paused raising rates. I would have to anticipate that based on data as well. So that's where I stand. That's where I'm at right now. And as we look at the daily candle, it's a really good candle as well coming in here at the end of the day. So again, that's my viewpoint. That's where I'm at. Now, a few other things we do need to talk about. Something like VIX. So VIX was interesting throughout the day. We keep talking about 24, 24, 24. 24 has been that level, and we got some good reactions from VIX at 24 today. So we were down here. We anticipated a push back up to 24. We got it. We could not hold, and we pushed right back down. Now, what I want to highlight here as well is you're getting everything you really need to get that push to the downside. However, you're not getting follow through volume. You're not getting pressure, downside pressure. Sellers aren't showing up right now. So if we look at the market again, even with the bad news being released as far as Bullard coming out and being a hawk as usual, you're not getting the pressure yet. So I had to just take a step back and say, look, am I being biased fundamentally? Am I looking at the market from a viewpoint of, is it possible for us to continue up right now? And I think until PCE comes out, I think you're on the path of more upside, my opinion, unless some really bad news comes out or Deutsche Bank goes under, unless something big happens on a bank or the Fed says something crazy or data comes out bad. And I don't think the Fed will say anything crazy until we get more data again, but that's where I stand. I think the next big Fed statement will be after PCE data is released next week. So you need to understand that as well. Now, people kept asking in yesterday's video and kind of the video before that, what's happening with yields? Yields, the 2-year, the 5-year, 10-year, 30-year, all of them, right? When we look at these, what is the important thing to understand here? People keep saying, Tyler, bonds are dropping, or the yields are. Yields and bonds do not move like an equity. You're not going to just move up in one day. Today, we saw some upside here. Even though the market was trending back to the upside, bonds started rising, the yields started rising back up. Okay, so just understand that as well. Same thing with DXY. We saw upside on the day on DXY. Understand that, kind of a little bit of a bull flag here. So just because the markets are, going in one direction does not mean that, yields and bonds and what's happening with the DXY is going to happen instantaneously, okay? Understand that. The fundamental aspect of the market does not move like the technical aspect of the market, meaning if you break a bull flag and you get volume, you're going to usually go up. That's not usually what happens with yields. That's not usually what happens with the dollar. Understand there's a lot of big factors that weigh in on these large. And whether you want to say it or not, they move heavily based on fundamentals and not on technicals. It is what it is. That's my viewpoint there. Looking at IWM as well. IWM, when I was short on this bad boy, it got out once you came down to my target down here, 170-ish. Now you can see, you push down, you're breaking back above. IWM, the fact that you're not holding down here, and again, IWM is one of the most heavily shorted of the indexes. We look at the Russell. Understand that the fact that you push back up isn't also kind of a bullish thing that we're looking at here, okay? So we have to understand where we're at and how we're moving. Giving you a little bit of a visual too here on Bookmap. The link for them is down below so you can get a better look at what's happening on the level 2 data. Again, end of the day, last 5 minutes, quick push up, volume. What's been the story over the past few days also? We continue to see the dark pool data, the icebergs continue to side in with the upside thesis. The blue line right here, the icebergs, over and over, heavy buying. We were seeing on the downside, we were seeing a lot of the selling happening there, the shorting. It's the opposite, guys. Again, I can only say it so many times. I've said the same thing since I think like end of January. I have not been fundamentally this bearish on the market in a long time, if not ever, right? And people say, well, Tyler, you weren't around to 2008, then you're talking about. I'm like, guys, I wasn't trading in 2008. I was pretty young. I'm only 25. Understand that. 2008, I believe I was like 11 years old, okay? Born in 97. I'm sorry. I got my college degree a little bit after the fact. I don't understand that. So we have to understand what's happening. And when we look at where we're at, these are major concerns, okay? And I could even argue that, honestly, this is a more dangerous area that we're in now than we were in 2008. I'm just going to say that right now. But if we look, continued buying, continued upside pressure. Again, more icebergs here at the end of the day as well here on ES, which speaks volumes. NQ, you can see you're pushing up to a major level, kind of stagnating at 12.9 at the end of the day. So that's where we're at there. Going into what's happening with the flow of options. As we look at SPY, as we look at Qs, right? Where are we at here? We look at SPY. It's a little bit on both ways, not heavy in one direction or the other. But we do know when we look at the April chain, like we've really gone over a lot, shorter dated contracts, and Cajun, shout out to Cajun in Discord, he's the one that really went over this. The thesis has flipped on those. Short dated options are more bullish, like April into almost, I believe, May are bullish. And that's where a lot of the flow is in the money on those SPY and Qs. IWM is the only one that's heavily bearish. That's why we traded to the downside the other day. Qs, you got some downside here near the end of the day as well for May and going into June. The June chain, July chain, those are more bearish chains. So it looks like a lot of these short sellers started rolling positions out a little bit further. My opinion, into June and July. So again, what does that tell me? And the short dated contracts right now have rolled over into more bullish contracts, which sides with the way the market's moving. The one side of the market that I believe has a bearish thesis is specifically IWM, which is interesting because if you look at IWM, it gives you a better look at a risk on versus risk off mentality. So it's kind of weird how we're moving here, but it's all worth mentioning and we need to be watching what's happening. The last thing I do want to talk about is what's happening in specific sectors. SOXX, I continue to talk about this. It's funny that I talked about this yesterday, and I really don't know sometimes if what I say is really confusing or if I say it in a difficult way to understand. I don't really know. I try to make things really simple for the most part. People keep asking me in the comments, am I shorting NVIDIA? Am I shorting AMD? Guys, specifically tech, like just tech in general, like broad tech. But AMD and NVIDIA are the strongest stocks potentially on the market right now. If you look at AMD, you have gone on a monster run since October. Since January, you literally just keep going up, making new local highs. I mean, you're going just berserk mode here, right? NVIDIA, even more so. Literally just going insane. Higher highs, higher lows, mounting previous highs. Over and over and over, pushing up, right? That was old right there, clear range. But you're just pushing higher. So these, I mean, looking at this chart, is there any sign to go short yet? Honestly, is there? You haven't even reached the local high of 290-ish. So I'm just saying, there's no reason to go short yet. I'm all for, if you're bearish, going short on an inherently weak stock, i.e. Tesla. Tesla, a great example. Tesla kept getting rejected at 200, pushed back down. Awesome little trade if you got into that. But when we look at semiconductors, they are not giving you a signal to go short yet. So just understand that when we're looking at it. Like me, I'm staying very far away from semiconductor shorts right now. Now we start breaking down, we start seeing lower lows put in on, semiconductor, the SOXX, then yes, right? But if you're looking to hammer shorts, you're looking to force anything, it's going to still be XLF. KRE. Someone asked me today, like, how is KRE up? I'm like, guys, have you not seen KRE drop from $60 down to $41 in a matter of like 3 weeks? I mean, do you think stocks only go down? Like, I mean, come on, you're not even really bouncing, but you're getting a little bit of love. Like, what are we talking about? So just understand what's happening here. You have inherently weak sectors and you have inherently strong sectors. Which one do you think is a better short opportunity? The one that's very weak and getting hammered, or the one that continues to make higher highs while the rest of the market's getting pummeled? Just saying, it's not a trick question. Okay. But then as you go over the rest of tech, like Microsoft, you have an ascending triangle, right? These all just show signs of continuation. Going into Apple, clear as day. We look at Apple, this was that trade from today, we had that marked out. You had this monster level here at 157. You mounted, retested, now pushing back up. I mean, Apple, very inherently strong stock. So when we look at it, you can just see clearly that these are strong stocks. We can look at, what's happening with Capital One. Inherently weak. Bear flag broke down. Okay, well, maybe that's just one of them. Bank of America, just going down. Okay, that's another one. Wells Fargo, we talked about this giant bear flag a few weeks ago. Oh, well, 42 down to 36. It's still going down. The list can go on and on and on. JP Morgan, you broke your 200 SMA. You're sitting right underneath it right now. So the list, like, you can just watch and watch and watch, and you can see one sector is very weak, very susceptible to more downside, and the other one just wants to keep going up and volume keeps flowing into the upside. So I just want people to be aware of where you're at and structurally where you have a better opportunity to win on going long versus going short. And the answer is really clear on both of them. I'm not looking to hammer longs on options on the bank sector. If I'm going long on the banks, it's on something that I'm willing to hold long term. Like, I like Charles Schwab as a longer term play, but I'd be prepared for more downside if I was to buy any, because it's a long term stock one. And I understand that banks have a lot of risk right now. So just be aware of what's really happening there and what's really happening in the underlying market. Again, just so you know, the newsletter will be coming out Sunday morning, Sunday evening. I forgot exactly what time. Jay's in charge of releasing it, but that's going to be coming out very soon. Sunday, it's absolutely free. Link is down below. Check it out. If you have questions, please comment down below. And remember, we have a educational video coming out tomorrow, so check that out as well around noon Central Time. Have a good one, traders.